This is a very, very highly anticipated requested video from you guys, and it's to do with something that Bitcoin really needs to do in order to actually kick off a bull run. Because see, Bitcoin hasn't been able to do anything that's been particularly impressive over these last weeks and months, and I think there's one really, really strong reason for it that we're going to cover with a lot of data in this video. It's going to be easy to understand, so don't worry about that. But before I get into it, I want to give you guys a little bit of short-term analysis as we do on this YouTube channel. Obviously, this is my main thing. This is what I'm most interested in, and the first key thing that I want to talk to you guys about is actually this 4-hour Ichimoku cloud. I was giving you guys a lot of warnings about it and how it could turn out to be a problem for Bitcoin, but so far we are just trading directly in it without any real problem. We saw a small rejection right here, and I don't know, I don't really want to call this a rejection, but we've just kind of been floating sideways inside of this resistance cloud, almost like it doesn't exist, which is good to see, because previously, guys, when we had 4-hour Ichimoku resistance clouds, they did cause quite a few drops down in the market. This was one big exception right here, but if we trace this back to when we actually had a sizable big Ichimoku cloud, guys, we generally get a lot of rejections off this indicator right here, and right now it looks like Bitcoin is handling it without much of a problem, which is absolutely fantastic. And in fact, this gets a little bit better. If I take you over to this chart, Bitcoin is actually trading in a little bit of a falling wedge pattern here, which are generally going to be bullish patterns in financial markets, not necessarily for Bitcoin, although in this case it did work out in Bitcoin's favor as well, which looks something a little bit like, and this really depends on how you draw it, you can draw it a number of different ways, but something, you know, a little bit like this doesn't really matter. And we have gotten a nice kind of, it's not really even a breakout because we didn't really pump that high above it, but what we did do, which I think is absolutely fantastic, is we did manage to come back down and test this resistance line and actually find support here, which is absolutely phenomenal, right? Previously we were finding a decent bit of resistance, for example, along these 2 points on this line, but this has now flipped into support, which is absolutely great. You know, another nice sign right here, and I think that if we are able to continue to pull off these kind of not necessarily super bullish, but definitely not bearish things, we are going to continue to see some nice areas of support develop for Bitcoin, like we can see with this 1-hour Ichimoku cloud. It's a nice cloud. It's on the 1-hour time frame, so I'm not too interested in it, but I like it. I like what I'm seeing anyway, nonetheless. And if we do take a look back at this 4-hour time frame, actually at this chart, if we actually measure the height of this kind of falling whatever pattern this is, you know, this stretches up by about 10.26% from bottom to top. And if we take that up to give ourselves a speculative target from our breakout point, that does potentially put us at about 18,200. So this is very close to one of the key levels that we've been looking at on this chart for a little while. If you're subscribed, if you've been engaging with these videos, thank you all so much for doing so. You are going to know that we have been looking at this $18,500 level. So this is fairly close, not quite there. I don't know, it's like 1-2% away. Let's see. Yeah, it's like 2% away, you know, from this price level right here, but it's pretty much there. This is a good price level that I think Bitcoin could get up to. It's basically the bullish case that I was talking about, right, where Bitcoin could end up kind of deviating above this level right here, which if you guys were paying attention since June of this year, you're going to know that this is actually the real kind of big market low that Bitcoin set when we had this really big drop down. We bottomed out over here and then started this rally up. So this could potentially be an area that Bitcoin gets up to, and generally, because of the way this market has been moving, we know quite well that Bitcoin has loved to form deviations, right? And the deviation very simply means that we have our resistance level right here, but we actually trade a little bit above it, we deviate above it, and then we come right back down. And we've been doing that with our support levels as well, right? So we had our support over here, we deviated just a little bit below, and then we came right back up into the range. So very, very common. This happens to screw over traders in the market. It's great for market makers, and those of you, well, I don't know how many of you guys are watching that this actually applies to, but for those of you who can make money, you know, from kind of liquidations and so on, you know, and there's a lot of different ways that this makes money, but it's generally not accessible to the retail like you and I, in order to take advantage of it. But now that we know that that generally does happen, I think it's fair to say that we could end up getting up here, and then yeah, if we deviate above it just a little bit, that already puts us at this target that I was talking to you guys about, which I think is cool. And the other cool thing is that we are potentially forming something like an ascending triangle here. I don't want to read too much into this because if you look at the time frame here, this is the 4-hour time frame, but it's still formed over a very short space of time. I mean, this started kind of on the 23rd of this month, and we're already now on the 27th, so it's been about 4 days. It's not a super long-term ascending triangle by any means, and so it's not something that I think is worth paying too much attention to, but nonetheless, it is still there. And if we take a different chart to draw this. I mean, it was drawn pretty roughly in the previous example here, but I think there's something here. You know, I mean, this does look like something of an ascending triangle. I mean, you know, we definitely don't have to trade all the way up to the apex here. That would take a very long time, but I think that this could end up resolving fairly soon. And bottom line, you know, what these ascending triangles are representations of is that, you know, our lows are getting higher generally, but we're keeping the same ceiling, right? So that's showing us that pressure is potentially pushing the market to the upside, and then, you know, with the ceiling being the same, eventually that pressure is going to burst. And because the pattern is kind of pointing upwards, we can make the assessment that it might rise up. It's generally only a 66% chance that these kind of things happen and push to the upside, but 66 is better than 50, and it's certainly better than 0. So that is definitely something that I'm keeping an eye on. And that's a lot of the short-term stuff, but, you know, really, I think what Bitcoin genuinely needs to start making a really nice big rally up is some more what I'm going to call decoupling, right? Bitcoin has been very tightly correlated with the S&P 500 and, you know, inversely correlated with the dollar for quite a while now, and we've known this. We've talked about it a lot. I'm not going to spend too much time introducing this, but I want to show you one very interesting piece of data here. It's actually to do with the Sunday trading sessions for Bitcoin. As you know, Bitcoin doesn't stop trading, right? Bitcoin is a 24/7 market. It doesn't have a second of downtime. The S&P 500, by comparison, you know, it's closed on weekends. It's still got another 20 hours, 19 hours until it opens. Even the dollar stops trading. It's not trading right now, actually, on this index, at least for the next 2-3 hours. So, you know, these are not 24/7 markets, but Bitcoin is. And the reason that that's important information is that if Bitcoin only forms moves when the other markets are awake, that tells us that Bitcoin actually needs those markets to show which direction it needs to move in. That's a really big point. And before I start throwing up any more charts, I need to talk to you about this a little bit more. If Bitcoin isn't able to produce moves on its own, that means it could end up getting held back by what's happening with other markets. And I'm saying this like I don't know what's going on. Obviously, if you've been watching for a while, you're going to know that we know exactly what's going on here. Bitcoin is only able to get a move up if the S&P 500 is moving up, and the S&P 500 is generally only able to move up if the dollar is moving down. So it's been a very, very clear relationship. I'm not going to waste any time showing this to you or proving this to you. It's so fucking obvious. I've been saying it for an extremely long time. God knows why so many people were disagreeing with me before, but at least now, you know, there's quite a widespread kind of, you know, agreement on this subject that, yeah, you know, I mean, people are generally looking away from, you know, Bitcoin and paying more attention to what's happening in the, you know, slightly more traditional finance markets. Very, very important note, because until that stops happening, I think Bitcoin is going to be held back. And that's actually the basis of what I want to talk to you about for a good chunk of this video. I've got a very interesting chart to show you, and it is this Sunday chart right here. Now, this might look a little bit overwhelming, but I'm going to break this down for you. Every single red line you see here is a Sunday trading session on the daily time frame for Bitcoin. So you're going to remember that many of you were asking for this YouTube video quite a while back, and I just didn't really have a chance to make it because of the other volatility that we had. But just take a look at a lot of the trading that's happened on Sundays here. You know, there are a few exceptions where we've seen really big moves on Sundays, especially after really high volatility sessions, but generally we're not getting particularly huge things happening on Sundays, right? Generally speaking, if you look at each of these Sundays, we're not getting a huge amount of trading happening. A lot of the big volatility sessions are actually happening kind of before or after our Sundays, but not necessarily on our Sundays. And this is really important because that's when, you know, the CME markets are closed. That's when the S&P 500 isn't trading. That's when the dollar isn't trading. You know, this is well, depends on your time zone for that. I'm talking about, you know, Dubai time zone, so GST. But very, very important note here, because if what we're generally seeing is that, look at these, every single red line, I mean, just pause the video and look at it. You know, it's very, very clear. Bitcoin just isn't able to produce much significant price action on these Sundays anymore. You know, this is really, really strong evidence to suggest that Bitcoin isn't moving with its own mind. You know, Bitcoin is moving, you know, at the mercy of the other markets, and that's fine. I mean, as a trader, I actually see that as a blessing, because Bitcoin isn't as easy to analyze as things like the S&P 500 and the dollar, right? I mean, our analysis on all of these markets has been very, very good, but with the S&P 500 and the dollar especially, if you've been watching this YouTube channel going back these last few months, we've been so on point with these two markets. You know, I mean, it's so easy to analyze, really. I would love to take credit for it and flatter my ego, but bottom line, guys, I mean, it's not difficult to produce really good analysis on these markets, and if Bitcoin is tightly correlated with these things, well, you know, that just makes our lives a little bit easier as traders, which is absolutely phenomenal, because if you're looking to take advantage of what's going on in the market using these beautiful bonuses that BitGet and Bybit are offering, you $30,000 on Bybit and $400, but very easy to get this $400 on BitGet, then that's great, because you only have to analyze the big markets and then come back into Bitcoin, and your job's already half done. Very, very cool and very, very useful. And by the way, if you are interested in these exchanges, BitGet is available anywhere in the world without a KYC, without VPN, and you can get this free $400 to trade with. You can chuck it in anything you like. If it makes you money, great, you get to keep the profits. And if it doesn't make you money, it was never yours in the first place, right? These $400 are just money that the exchange is giving you for free, so you can do whatever the hell you like with it. Prime XBT, by the way, I do have to mention, offering you something similar up to $7,000, but they're allowing you to trade the S&P 500. They're allowing you to trade the dollar even, and Forex pairs as well. Very, very cool indeed. Let's bring it back to the video though. If we take a look at another piece of evidence that I think is really, really interesting, this is a chart that shows you the CME futures price for Bitcoin, and it shows you the last time we've had a fairly significant gap in the market, which by the way is fairly high compared to where we are right now. And this hasn't been filled either. They don't need to fill, but generally they do. This is one of the gaps that we've had that we've got a little bit higher up, and we've got another one up here as well. But generally Bitcoin isn't able to produce many CME gaps now. I mean, we have produced a few here and there, like there's one right here, another one right here, a couple like this, but I mean, they're getting filled. They're not actually that big, and they're not during particularly high volatility trading sessions. So we're not getting like a huge kind of, there's one right here as well. Has this been filled? Yeah, it was. So we're not getting like particularly huge, CME gaps as well, which again is just kind of more evidence that this market really needs to decouple. And the reason that I'm saying that is, if we're not able to produce price action that is significant to Bitcoin, right, where Bitcoin is kind of leading, well then we're not going to get a bull market, right? I mean, if Bitcoin isn't outperforming other assets, then the only way Bitcoin can get a bull market is if other assets start entering a bull market. And that's not a bet that I particularly want to make. It's for a few different reasons, but I think one of them is just that things like the S&P 500 guys, those kind of indices, they move slowly, right? I mean, the S&P 500 definitely doesn't move as in as much of a crazy way as Bitcoin does. I mean, it's obviously much safer because of that, but we're not in Bitcoin to make money slowly. We're in Bitcoin, we're in crypto to make money quickly. And the S&P 500, if that's not doing it, but Bitcoin is dependent on it, well, we're not really making any progress then, are we? And this is a really, really important thing to keep in mind. Now, obviously, this isn't a problem for traders like you and I. I mean, I don't know about you specifically, but many of you guys are derivatives traders, and so am I. It's not a problem for us because we can make money if the market is going up, if the market is going down, and we have been doing that inside of _Fly's VIP, which you can get yourself inside of with a 60% discount we're running for Black Friday right now. We have been able to do that, and that's absolutely great. But in terms of just kind of investments and seeing these things go up, we need to see a decoupling here. We need to see things like CME gaps producing on this chart, which we used to get a lot of, but we're not getting very much of anymore. And I think that's a really, really big deal, because if we're not getting CME gaps, well, that's a very clear representation that the market just needs the traditional finance markets to start moving for Bitcoin to. And I think if we start to see this change, we could be in a slightly better position. We are here's another example that we are actually seeing with the dollar and Bitcoin. The dollar has got a very clear inverse correlation with Bitcoin right here, where we look at this red line, which is at the same place for Bitcoin. The dollar really starts to shoot up right here on the week of the 8th of November 2021, so a little bit over a year ago now, and that's exactly where the really big disastrous drop for Bitcoin begins. Very, very important. We're seeing an extremely clear inverse correlation. That has started to change a little bit as of very recently, not particularly in the direction that we wanted, but we are seeing it nonetheless, where if we take a look at the dollar, let me bring this chart on board right here. If we take a look at the dollar, we have seen quite a drop for the dollar, and that inverse correlation between Bitcoin isn't really there right now because Bitcoin has dropped at the same time as well. So it's not the decoupling that we want, but it's the decoupling that we're getting, and it's a start. I mean, I wouldn't put too much wait on this, because I think a big reason for why the dollar dropped was, just because of interest rate hikes and stuff like that. And I think a big reason for why Bitcoin dropped is purely because of the, FTX drama and whatever other, kind of domino effects that might trigger. So I don't think this is even necessarily like a decoupling that, is relevant, rather than just, the market responding with fear to something that's, I guess, somewhat scary. And that's all that I think there is here, because if we do look at the S&P 500, it's continued to move up really nicely against the dollar, but Bitcoin isn't really correlated with the S&P 500 right now, and that basically stopped right when the FTX drama began. The FTX drama began, if we look at this chart right here on the 4-hour time frame, pretty much like right at this peak over here, like 7th, 8th of November, something like around here. This is where it really started to get pretty shit for the market. This at this stage, the S&P 500 just continued to rally up. We can actually see this very, very clearly if we overlay it on top with a new price scale. See, I mean, you can tell very, very clearly where this really began. It was probably, the FTX drama happened like around here. I don't remember the exact date, but let's say the 7th of November. S&P 500, yes, it does drop a little bit, but it absolutely shoots up. Looking at this orange line, S&P 500 absolutely just skyrockets after this, and Bitcoin just ends up getting left behind, right? Very, very clear chart. Very, very clear chart right here. Bitcoin just not able to produce the same kind of gains that the S&P 500 was able to produce. Like if you look at this high that the S&P 500 was at, Bitcoin comparatively was at $21,000. S&P 500 got way above that high by the 14th of November, but Bitcoin within that very same time frame dropped massively. 14th of November around over here, Bitcoin down by about 20%, S&P 500 rallying and breaching those highs and still setting higher highs right now as we speak, ladies and gents. That is just not something that we can say we've seen for Bitcoin, and I think that to me means that this little decoupling we do have, this is just due to, what I've been calling for a very long time, just temporary fear in the market. Again, we look at things like the fear and greed index, and they're still showing us the very same signs. Yes, we have managed to creep out of extreme fear, but only by 1 point, and we're still very, very low. It wouldn't take much for Bitcoin to just, send this thing back down into extreme fear. Literally, it would only take a 1 point drop on this fear and greed index. It's really just nothing that I'm particularly worried about. I think that there's still a little bit too much kind of negative sentiment in the space, or I should say not enough positive sentiment in the space, so that, this does actually start to look like, to me, one of those situations where, the market is just overwhelmingly bearish at lows. I remember a really good example of this. I was talking about it on YouTube quite a bit and between my personal friends, with the GBP against the dollar. We saw the pound drop down to $1.03, and it looked like it was going to flip, just like the euro did a little bit before. And I was saying, guys, there's just, too much negative sentiment about this. You have to expect that this thing is going to be able to continue rising up. And obviously, it's very hard to stomach those kind of ideas at the lows, but that's exactly what happened. And the pound is in a pretty good position against the dollar yet again. It's not looking too bad. Yes, I know it's at $1.20. It's still a little bit too low, but look, we even cleared a fairly important area of resistance. And, to think that this can't happen, with Bitcoin, I don't know. I think that there is still perhaps a touch too much negative sentiment, and there's a good amount of things that the market has going for it right now that could dismiss it and could allow the market to rise up. Again, with the short-term analysis, I'm not seeing a whole lot, but it is getting better. The fact that we're not getting rejected by this 4-hour Ichimoku cloud yet, the fact that we've pumped out of this falling wedge, the fact that the speculative targets put us kind of right where we expect to be. If we manage to get up here, the kind of low $18,000 range, that's perfect. We can then kind of regroup and look at what might happen next in terms of potentially rising a little bit higher. All we need to do is get above 18.5, and then we're right back into a very, very healthy place in the market overall. Now, we are spending way too long below that level. This is 20 days. This is a hell of a fake out if it does end up being a fake out and the market recovers. Honestly, at the moment, it doesn't seem particularly likely that we're going to do that to me, but still very much on the cards. I think that would surprise a lot of people. I think that would really confuse a lot of people, and the market loves to do that. Bottom line, we don't move down in straight lines forever. We don't move up in straight lines forever. I say it all the time. I'm saying it again right now. I've never been wrong about this. The market always gets retracements whether it's up or down, no matter which direction we're moving in, we always get retracements. If we don't get retracements, the bounce back is even stronger. And guys, we really haven't had very many retracements so far. You know, I mean, we've had a couple, but they haven't been particularly huge. To me, that has to indicate that the bounce is going to be getting a little bit stronger. I think you can even start to see this. You know, if we look at this with the RSI, yeah, it's even showing on the RSI, guys. Look at this. Let me take a different chart where I don't have any drawings and just delete these. You can see this very, very well here, actually, where Bitcoin has been, you know, I'm just going to draw two lines here, one to represent this drop and one to represent this following drop. And I just want to show you like the gradient with which Bitcoin is dropping. Very easy to eyeball this. You see like the intensity of the drop before so much stronger than what we're seeing right now. And at the same time, guys, look at the RSI. The RSI is actually trending up now. Look at this. Look at this, just kind of, you know, just showing you what this looks like, and then putting, you know, a kind of equivalent line across, you know, what we could call our resistance. It's quite clear right now that, oh, I should probably do this from here. It's quite clear right now that while the price is dropping, we are seeing the market gaining some relative strength. This doesn't have to be particularly bullish. If you guys have been watching me for a while, you're going to know that I don't place a lot of importance with what the RSI says, but it still confirms the same thing that I just realized as well, just kind of live on this video, which is that, yeah, our dump has slowed down, you know, and you know, for it to slow down on such a large time frame, this is the weekly time frame, of course. I don't know. You know, I think way too few people are open to the idea that Bitcoin could end up forming some sort of a, you know, I mean, it doesn't necessarily have to be anything as crazy as this, but, you know, like something a little bit like this, maybe, like I said, it doesn't have to be this crazy, right? Maybe it just kind of, you know, looks something a little bit like this, up to $30,000. But I mean, you know, if you brush this off and act like it can't happen, I think you might be in for a bit of a surprise, you know, something a little bit like this. You really think that can't happen? You know what I mean? Like this looks, even if you think we're going to drop lower, this is if you think we're going to drop lower, this would just make so much sense, you know, for Bitcoin to produce, you know, kind of like inverse head and shoulders, pump up a little bit, you know, get a lot of people excited into long positions buying Bitcoin again and so on. And then, you know, bam, we drop down a little bit more. And, you know, as I've been saying, I think as this kind of fear, assuming, you know, worse things don't hit the market, and so far, we've seen a lot of bad shit hit the market, but nothing as bad as FTX. Assuming that worse things don't hit the market, and assuming that the dollar continues to drop, which are two, at this stage, dare I say, I feel somewhat safe to make those assumptions. I don't know. I might be wrong. It doesn't really matter if I'm wrong. I'll keep trading the downside if that's the case. But if that does happen and the dollar does end up dropping down, you know, perhaps to kind of 100 or even a little bit lower to some of these essential support areas, you know, I don't think that we should be too surprised if Bitcoin is able to muster up a little bit of a rally heading into the end of this year. It's been a pretty bad year for Bitcoin, and things, again, like I said, they just don't drop in straight lines forever. Bear market rallies are possible. They happen all the time. You know, I think we're due for one now. I think the fear and greed index is showing that to us. And I think that, yeah, across the shorter time frames, we're starting to see some nice signs. Like I covered with you at the beginning of the video, we do need to see this, you know, kind of Sunday situation resolved, though. You know, I mean, if we want Bitcoin to really do something quite fantastic and get to very, very high price levels, this needs to resolve, and that is something that I'm going to keep an eye on. For now, though, between now and then, and regardless of what happens in between, there are so many opportunities, not only just with Bitcoin and the altcoin markets, but also with the S&P 500, which is very easy to analyze right now. I'm going to be sharing with you guys some cool ideas that I've got with the S&P 500 over these next videos. All of these are available to trade on Prime XBT. It's linked in the description down below, and when you follow my link and put in the 4Flies promo code, you are going to be getting some really, really cool stuff. You're going to be getting discounts on trading fees. You're going to be getting up to $7,000 in deposit bonuses free of charge. That means whatever you deposit, you get you know, extra cash in your account, which you can trade with free of charge. You can, you know, risk that money, and it was never your money anyway. So if you make money, great, you get to keep it. But if not, it doesn't matter. Almost practice money, really. Same thing available with BitGet with a very, very good ratio. They're offering you like 10% of what you deposit up to $4,000 here with $400. So anything above $4,000, you're getting a $400 bonus. Very, very cool indeed. You know, pretty achievable for many people. Of course, you know, a lot of people can't deposit this much money either, but many of you guys can. And if you can and you're willing, you do get this free money as well. And yeah, Bybit's offer is obviously the craziest out of them all, but also a little bit harder to get. So still well worth paying attention to, guys. I mean, with $30,000 up for grabs on Bybit, if you combine all of these and you just put a few risk-free trades in, you're swimming in cash, really. So it's well worth checking out. If for no other reason, then you can just YOLO this money into whatever ridiculous trade idea or system that you have in mind. And again, I mean, if you make the money, then good for you. It's yours anyway. So with that, guys, I really hope you have enjoyed this one. We've gone fairly in depth here. Let me know what you thought about this video. Not really a typical video from me, but if you enjoyed it, I would love to know. Let me know with the comment section down below. If you have enjoyed this one, you know what to do. Hit up the likes, subscribe, tick the bell, do all that good stuff. Get yourself inside of 𝗂𝗡𝗡𝗡𝗡 VIP with our 60% off discount, and I'll see you all in the next one. Cheers. Bye.